Hello, I'm Todd Lees, Managing Director of Latima Brokerage, and welcome to our first serial and Pulse Wire update for 2018. The last 12 months in our pulse industry have been quite tumultuous, to say the least. We've seen prices for all pulses come off record highs early in 2017 to what could arguably be considered levels that are now more in line with our 10-year average. This scenario was reflective of very strong buying behaviour from the subcontinent, in particular India, who on the back of consecutive poor monsoons and strong import demand drove prices to record levels in an attempt to satisfy a large short in the domestic market. Farmers in both the southern and northern hemispheres reacted as best they knew how, and that was by increasing the acreage allocated to pulses at the expense of cereals, oilseeds and feed grains. Several factors contributed to our current environment. These included record crops in both the northern and southern hemispheres, above average production in the 2017 Rabi crop. This was followed by another decent monsoon, which could suggest the possibility of another good crop or Rabi crop in 2018. With consumptive demand weak, domestic prices have subsequently crashed in the subcontinent. So much to the point that the Indian government deemed it necessary to introduce import duties for some pulses, including yellow peas, lentils and chickpeas, in an attempt to reduce imports and also support local farmer prices. So what does that mean for pulses in 2018? Well, unfortunately, I think the hangover of 2017 is going to continue well into the new year. But there will be a necessary structural change in the global balance sheet for pulses. That is, farmers will more than likely reconsider their planting intentions for 2018 and revert back to pre-2015 cropping rotations. The incentive to plant wall-to-wall, back-to-back pulses has now been severely diminished. And I would suggest we will see production declines in both hemispheres, which will result in both stabilising the current price levels but also establishing a platform to support a firming of prices at the back end of the year. Compared to the wild ride of the past 2 years, 2018 could well shape up to be a very sedate hayride for all of us. On that note, I'd like to wish you and your families a very safe, happy and prosperous new year, and let's hope it's a kind one for all of us. And I look forward to catching up with some of you perhaps at the IPGA in Delhi, or even at Gulf Food in Dubai in February. That's all for now. Thanks for listening, and bye for now.